So hopefully me selling half and keeping half is just going to be the best of both worlds. Don't get me wrong though, I'm still bullish on the stock, and even at $800 a share, I had no intention of selling whatsoever. But once I see this amount of irrational exuberance to bring a stock past $900 a share just almost overnight, I get a little concerned that I want to cover some of my profits in the event it goes down.
How long could this clown keep losing money, they asked. The answer, as long as it takes to get rolling. Because Wall Street will gladly raise money for a talented executive who dreams of disrupting an entire industry. They love that. Again, like Amazon, if you're a Netflix user, the stock made perfect sense. But to the bean counters, its valuation seemed absurd. In the end, Netflix obliterated the shorts. Some of these guys were very smart, much smarter than I am, but they just didn't get it. They probably didn't use the product. And now along comes Tesla. Elon Musk has fought everyone, including himself, to create a technological marvel on wheels. This is a deliciously whimsical, always superior vehicle that fits the millennial zeitgeist of first do no harm to the planet. I think there's a huge appetite for any kind of legitimate play on sustainability, and his is Exhibit A.
Hey, I looked at this, okay, I'm looking at this as this is all house money now at this point, okay? Basically, I put like 60,000, maybe 70,000 somewhere in there, like 60 to 70,000, let's say, of my money into Tesla stock when I bought those, 300 shares or whatever I bought for, okay? And now we're at a point where it's all house money from here on because I just got $93,000 in proceeds. Plus I booked, $20,000 plus in profit, maybe even $25,000 plus in profits. So I just got to book a ton of profits. And now, all house money with Tesla stock. This is no longer like a situation where, oh my gosh, if Tesla went to zero, which is completely irrelevant. But even let's say Tesla somehow like it doesn't even make sense, okay? But let's just say it goes to zero, okay? I still would have made a great sum of money in Tesla stock, even if all my other shares went to zero, which is once again completely unrealistic. But if it happened, I still would have booked, $20,000 plus in profits.
Get this, that move yesterday added about $20 billion in market value. It added, Andrew, a Fiat Chrysler in value yesterday. Tesla's market cap is now equal to or greater than, remember that in high school?
Yep.
Nike, Nvidia, or Bristol Myers. Its market cap, if it keeps going up, could surpass McDonald's and Citigroup next, but it could take a little bit longer, at least according to Canaccord Genuity. In the last hour this morning, they downgraded the stock to a hold with a $750 price target. Also new in Tesla news today, a senior executive said the company will temporarily delay delivery of some made-in-China Model 3s that were scheduled for delivery in early February because of course, the coronavirus outbreak. The executive said the Shanghai plant plans to restart production on February 10th.
My personal investing strategy is just buy, hold long term. Started buying my Tesla stock in 2016, averaged in at probably around $240, $250 per share. Haven't sold a single share on this run up. Don't plan on selling a single share. I think the valuation, what we're seeing right now, probably a combination of a little bit of short covering as well as just a significant re-rating for the company. What that means is essentially the stock market is changing its perception of what it thinks of Tesla based on the company's execution and fundamentals, but a ton of other stuff. And I was looking at the valuation today, about 900 per share. Actually, as I'm recording this, I think we're above 900 per share, 905 per share, up another 16% today. I'd not keep buying because I don't have any money. I actually spent like all my money up front to buy Tesla stock when it was down earlier this year. And now I have to like save up all my money to pay taxes. So I don't have money to buy Tesla stock right now.
Steve, let me cut to the chase. Are you still short Tesla?
I covered a while ago.
How did you cover? What was the decision tree to make that decision?
Look, everybody has a pain threshold, and when a stock becomes unmoored from valuation because it has certain dynamic growth aspects to it and has cult-like aspects to it, you have to just walk away.
Do you have an auto industry view? You're acclaimed, obviously, with the movie and all that, of looking at a more holistic problem and then acting on it through individual securities. You look at the global auto business like GM and Mari Barra coming out today. The CFO will be with Bloomberg here later this morning. Do you have a holistic auto call that you can act upon?
I have a holistic auto call. I mean, we own GM. I think the company is a dramatically different company from what it once was. It's not really a car company anymore. It's really a truck company with an option on autonomous driving. So I think the stock is misunderstood, but that's the only stock that I have a view on.
Bring the chart up again. Iceman and I have never seen this. It's not that it's a parabolic chart. We've seen parabolic charts, but a company of this somewhat size, really extraordinary. How do you explain that? The line right now, Steve, is retail's in big, or maybe it's short covering. What's the Iceman why on this parabolic or even log parabolic move?
I don't have a why. I mean, sometimes there's no why.
We booked you for the why.
I don't have a why. You look at sometimes things can't be explained that well, and if you're short, you got to walk away. There's no glory in losing money.
Here is a 3-month graph of Tesla. It's been up 183%, and I cannot predict that it was going to be similar to Bitcoin, and right now it's looking kind of like it. It's not running up as much as Bitcoin, but it certainly looks parabolic, and it looks like a bubble, and it's completely unhinged from any kind of fundamentals that I can measure, even forward 12-month earning, which I optimistically think is at $12. Okay, if you multiply this by 80, it's $960, which is what it is at right today. Today is $900 some. Right now I still have 100 shares. Since the last time I made my video, some people thought I sold it. No, I still hold on to it. I did not sell any at all. My cost basis is at $195. I have 100 shares. It's up about 350%. And yes, this is enough to pay for this car, which is, I think I paid $72,000 for it, minus $5,000 or so of government incentives, rebates, or whatever. It still comes out to be like $67,000, and just from the profit of these 100 shares, it will completely pay for this car, which is pretty awesome. I mean, you can go, oh yeah, what about taxes and stuff? just whatever, right?
Talk about Tesla, where it is today. We had an analyst on the beginning of the show with a very different price target. $800 has a neutral now that it's trading up near $900. What would it take for you to be wrong, just on the conservative side with this? And I ask this from the context of having covered Apple for a long time. Everybody expected them to come out with a phone, but nobody expected it to be the most successful consumer product, arguably, of all time. Sure. What would it take for Tesla to do that well and prove you wrong?
So there's different scenarios that we explored in our research. And just before I answer that, let me step back and just say, if Thomas Edison and Henry Ford made a baby, that baby would be called Elon Musk, okay? I mean, he's absolutely incredible what he's done, using his enthusiasm to really change the world, if we're being honest. Now, what we mean on what the recommendation on the stock is a different thing. We think what's in the price right now is something approaching 4 million units of annual volume by the year 2030 at a 15% EBITDA margin. So that would be a margin roughly 2 times an auto industry average at a level of volume of 40%, maybe approaching 50% of Toyota, okay? But that's if you just look at it as an auto company. If what's happening now in the market is essentially by doing a deal with China to bring in some capital and to kind of draw a line under the distress argument, what Tesla's basically thrown a stick of dynamite at a fireworks store. And it's led to a chain reaction whereby auto analysts, both buy side and sell side, are passing the stock over to tech analysts. And so from a tech perspective, they aren't just thinking about numbers of units sold times price or margin. They're thinking of users, recurring revenue. Do they become a battery supplier to the world's auto companies, right? When you start doing that, if you had tapped into 10% of all the cars on Earth and they could make $10 a month, that's $400. If you could tap into 10% of all cars and supply batteries by making their own batteries, watch April 4th, where they might unveil a terawatt hour of capacity, that's how you can then add and then get into the multi-$1,000 price targets that people are talking about.
Isn't that...
This is getting crazy, right? Tesla stock soaring as $900 a share. Elon Musk getting richer faster than any other billionaire so far this year, actually than anyone so far this year. To Point Bridge Capital founder and CEO Hal Lambert. Hal, what do you think's going on here? Is it justified?
Well, I think this decade is starting off as the Elon Musk decade is what's happening. I mean, his net worth's gone up $16 billion year to date. And by the way, the shorts have lost about $16 billion year to date. I mean, Elon Musk is laughing all the way to the bank, but he's also happy because mainly the shorts are losing. And he doesn't like to lose. I mean, Elon Musk is a winner. He's a killer from a business perspective. And there's few groups he's disliked more than these shorts that have been out there the last couple of years. And so I think he's really liking that. And so what you're going to see here is the shorts are still out there. There's not technically a short squeeze happening here, Neil. The borrow is out there. The shares are available. They're not being squeezed out. They're just losing billions of dollars as the stock goes higher.